Hey, what's good, day traders? In this session, you're about to learn how to backtest like a machine. We have put together the most methodical document so that you can go and look back on your strategy, your signals, and document them in a healthy way to see which ones are best and why and when, but also more importantly, what is happening before those signals. So you can start to take note and positively brainwash yourself with the right content so you can start to see your profitable signals fire before they do. So buckle up, get ready to enjoy this session. We'll see you on the inside. Welcome everyone. Tonight is going to be so much fun. We have not let it out what we're on tonight, but tonight we are getting into backtesting. So we thought since we're heading into a break over the Christmas period that we'd give you guys some healthy homework, and everyone goes on a different journey when they want to figure out what backtesting looks like. Everyone figures out their own approach. Everyone has different methodologies, whether you use the replay function, whether you don't, how you journal it, what you look for. And so Dad and I have been talking about this for quite a while, and I've had a lot of individual conversations with people, but I decided it is time. And so Dad started putting together some things on a spreadsheet, and then I took it and I made it colorful. And so we have something tonight. So we've got a framework that everybody is going to be able to methodically work through to be able to go back and not just back test, but you could also actually use this as a trade journal potentially. So I'm going to let you do with it what you like once we get it into your hands. We'll figure that out later. But for now, we are going to rip into it. I'm going to screen share. I'm going to show you what this thing looks like and start the process of getting you all to start figuring out what do those golden setups look like, how to look for them, how to document them so you can positively brainwash yourself. Sounds good? All right, I'm going to figure out how to screen share this puppy and we're going to get into it. So first up, let me find the chat because I can't see that. There we go. I can see that. I can see that. Cool, cool. A few more filing in. Good to see you all. Okay, let me first just screen share the document and then we'll rip into sharing some TradingView with it. So Google Chrome, here we go. So guys, here it is. I put this together with a few colors and things, and so it gives you the ability to have about 100 different trades in here, and obviously you can copy and paste and expand it and do whatever. But I'm going to take you through this and show you what this is and how you can use it. So basically, you know, we've got these different titles across the top. Hopefully you can see this and it's not too tiny and tweeny and squished on the screen. I'll tell you what, let me just zoom in a little bit and see if this will work for me. There we go. So across the top here, we have got obviously date. You want to know when the date is of whatever trade you're looking at. Day, Monday, Tuesday, Wednesday, whatever. Thursday, I've just got an example in here. I'm going to show you guys the time. So you're going to be able to save this, make your own copy of it, and write in here whatever time zone that you're looking at within TradingView, because you can set that. Going to write the time of the particular signal that you're looking at, what session it is, whether it's New York or Asia or London, etc. The time frame of the chart that you are measuring right here. So say it's a 3-minute. The instrument, that could be gold, US 30, NAS 100. Buy and sell signals. Is it a buy signal? That's what you're going to write. The type of signal. So maybe Dad can expand on that for a little bit when he comes on soon. But was it a bright buy signal, a normal buy signal? Was it a counter trend signal? Fill in the blank. Could have been a triangle up, could have been a buyer momentum, seller momentum. We have lots of different entry signals. But for now, just keeping it pretty simple. Rules. So another opportunity to just, when you're looking at the signal, were the rules met? Was it TAS? You know, were all 3 met or maybe just 2 of them? So you'll find pretty often, sometimes there's 2, because often space will be an issue. There might be a pivot in the way or a line. So you can write in there which rules were met and just put there a 1, 2, or 3. Pullback. Was there a pullback during the trade moving towards TP1, 2, or 3? So I put there yes in this example before it hit TP3. This particular trade actually hit TP3, so I would actually write there TP3. You might have been aiming for TP2, which would have been safer on this example I'm going to show you. And then next one, you know, you're going to measure. I'm going to show you exactly how to do this. Measure from the point of the candle. When the candle closes, you're going to measure from the close down towards or up towards, if it's a sell, the stop loss, so measuring that, 44 pips. And then while you're doing that, you're going to measure the other way to say TP2, which will be 88 pips in this example. And actually, let's just leave that at TP2 because that's going to make a lot of sense for this example. And that's a risk to reward of 1 to 2. So risking 1 to make 2. Sorry, this thing's jumping all over the place. And then wave number. We're going to start thinking more about what we've talked about, where, you know, you might get a bright signal, a golden setup, but how many waves into this move are we? Are we at the beginning of this move, like wave 1, or are we coming in a little bit later where there's a lot more risk attached to the trade? And then level rejected or line rejected. Has price rejected a key level? Could be the POC, could be the 233, whatever that might be. So I've got some examples of that. And then pattern. Some examples you might see, like another one I looked at today earlier was like a bullish pennant, like a flag, whatever. In this case, there may have been some divergence right before the trade. So that was a pattern that you could potentially just write in there. And then was the trend weak, strong, or ranging? We were coming out of range in this example. And then trend table, was it green or red, or was there a mix? And so in this particular time, there was a bit of a mix. So those are all the different titles that I thought to put in there. And guys, like I said, this is V1 when I mentioned it earlier to some people before we launched the Zoom. So we'd love your feedback, but for the next, 2 or 3 weeks, go and drive this puppy, fill it in, and you might want to add a notes column or whatever, and go through. And I decided to break this up visually into batches of 10, so you can at least just, see the forest from the trees or the trees from the forest, however that saying goes, and then just go into the next one. And then when you're actually documenting these trades, another cool thing to do is to actually screenshot them. And so then you can simply have a folder and call it your backtesting folder. And you can just label that particular photo number 1 or number 2 or number 3 or number 17, whatever. And then that corresponds to this particular line on your backtesting sheet. So hopefully that is sounding good to you guys. I'm going to unshare that for a moment and maybe jump back into TradingView and try and see if I can share them both at the same time. All right, guys, so TradingView on the left and our backtesting sheet on the right. So this example from Thursday, we had our live analysis happening. Basically, we probably all woke up and jumped on somewhere around 5:30 over here-ish. So this one particular signal fired already. I'm on a replay mode, and I want to show you what I would do when I'm first getting on here. I would be turning off the indicator. I'd be hiding all the drawings, zooming out a whole lot, and just going, okay, where the heck are we? And I'd probably turn on the sessions indicator because I want to know what's been going on. So we're not talking about full-on top-down analysis right now, but just knowing, I haven't actually adjusted my sessions for daylight savings just yet. So the open was actually more like 3:30 around about here. So now looking at, okay, we've had a whole lot of range throughout the day. London moved it around a bit, and then we had a whole lot more range, and then price started to move a little bit. And when I mentioned on that chart that divergence was the pattern, it's something that's a bit more advanced and not really a key element of our strategy, but the pattern here is basically price breaking out of this range. We've got price moving up and breaking these highs, and then price breaking down and breaking these lows. And so it's kind of like price is starting to expand, basically, and break out of a zone. So with that, this low being lower than that one and these lows being higher than those, we basically have bullish divergence after this little stop hunt down here. So this particular example leading into where we're going to start tracking from, divergence was the thing that showed us what was what, but that's a little more advanced. But let's just turn that off. Now we know where we are. So we're on the beginning of the New York session. Turn TrendForce back on, and I currently have the pivots turned off just so we don't have like a million lines all going at once. So when the indicator fires up, we're going to see what's going on. So I got quite a few drawings on here, and I did them also on that morning, and I've got a huge channel, and you can see prices just come down to the bottom of that channel. And then after that, also being the bottom of a channel was quite an indication that, okay, well, that's the lowest in that entire, quite a long spanning channel. And then after that, price came up, and we got a signal. So I'm in replay mode already. So when this signal fired, this is the thing. This is the information I would like you guys to put into the chart. So over here, where you can see it's 3:48 New Zealand time right there when that buy signal fired off. It was, I'm pretty sure, a bright one. Looks pretty bright to me. It's a 3-minute chart, so take note of that. It's obviously a buy signal. It's a bright buy signal. And then at the time, what rules were met? So there's the trend zone alignment is definitely happening between the one, obviously our main trend zone up top and our MACD down below. Otherwise, we wouldn't be getting a signal. And at the time of this, because we're on the 3-minute chart, what have I got here? The 8-minute. Yeah, the 8-minute down here is currently all green at this point, but I need to actually go further back. I need to select the bar over there because the trend table shows us the data based on the moment that we are actually on. So that will adjust live so you can see in real time how that table adjusts. But I remember it was pretty mixy. So there we go. You can see right now there's actually green only starting to show up on that 1-minute chart. And so there we go. So at the time of the signal, what's going on? Well, you can see we've even got a bit of a red zone of resistance right above us and the 8 times. So if we're looking with our rules, TAS, trend zone alignment, the angle, and space, we don't necessarily have alignment on the times, 3 times higher in terms of zone alignment. That's a little orange. So we've got a mixed bag right here. But anyway, I don't want to get too lost in the weeds of analyzing the signal. Just want to show you how to document it. So at the time of the signal, whether it's a great one to take or not, the main goal for this, if I can just backpedal a little bit, was to get you guys to go and look at and positively brainwash yourself with what the best signals look like. The ones that run, the ones that fire, and really study those, and more so study what happened right before those, so that you can get the confidence to enter on those signals. And so you could treat this, this document like, I'm going to go and think about, okay, when do I actually trade? I only trade during London, or I only trade during New York or Asia, whatever it is. You could just use this and go and backtest whatever session you only trade in. That'll save yourself a bit of time. It might, if you've got some flexibility, be better to actually just go through and do as much as you can and document like, okay, if I'm only looking at, say, New York, then let me just check. No, doesn't think it. If I'm only trading New York, I'm going to go through and I'm going to box out all the New York sessions. And from there, we're just going to look at how many signals. Maybe you want to count all the signals that fire during New York and just have them all there and start building your own data on maybe there's 2 to 3 signals on a 3-minute chart in a New York session, and that one of those is a ripper. So it gives you the patience then to maybe wait for it. So right now, the signal's fired, and it'd be breaking the rules to take it because they're not all met. But how did this one go? So aside from this red trend zone right here, and I guarantee there's at least 1 or 2 pivots probably in the way as well, we don't have space, but that is the one rule that you're probably going to find yourself violating the most. If anything, the other ones, you're not going to. Like, you need to have a strong angle. You're just never going to violate that. And you need to obviously have the trend zones in alignment. So if the signal's bright, that means there's alignment on this time frame and the 1 3 times higher. So that rule is definitely ticked. But we have a zone right here, which is showing us a red resistance because of that wick over there. That is what gives us this. So basically, price rejected this zone strongly before, giving us this red zone. So when this signal printed, it was right here starting to rip into this zone. And then what? So it looks like we've got a little bit of a pullback. That next candle, you can see there's a wick down here. So price did pull back. So you can write on there pullback. So there's a signal. Why am I saying that? Why do I want you guys to become aware of pullbacks? Because very often you will see a signal, hit a pivot, hit a something, hit a zone like that, pull back into the whatever zone. Like it's pulling right back into it looks like the bright green 13 right there. And it looks like the times 8 trend zone just in there. If you zoomed in, a little tricky to see, but I'm going to do it. Let's just get us right in there. Look at that pullback, guys. So price pulled back, hit our wonderful zone. And then what happened? So you'll notice how often, so you could call that a late entry, but when you start to identify how price action works, you can be patient. You don't have to take the signal. You could wait for price action to tell you it has now pulled back, rejected a line, it's rejected a level, and it is now moving back up. So let's see how this played out. We'll push play. So right now, I've got that set to TP3, but let's just bring it down to TP2. And that would be, like in terms of space, if you're ignoring the pivots in this red zone, TP1 and TP2, I mean, that is a healthy place to aim. You might even want to aim slightly under those moving averages because they're strong, but that's to see how it played out. And this is, pretty early on into the New York Open. Price comes up. Well, geez, there we go. Pretty quickly, it smacked into TP2. Done. And then what do we get? After we hit those big lines, we get a pullback. We get a white candle. So you moved your stop loss to the base of the previous candle right there, and you may have just been safe. And again, price then continued to move. So I'm going to drag this up just back to TP3 so that we know how this trade ran. Let it run, see what happens. And you can see now, again, guys, separation. You got our trend zone widening. This has now turned green. The lightning bolt tells us that we've broken through what was a resistance zone. It's now support. It's turning green. And we're also getting our explosion emoji, which is price breaking out of that 15-minute level. So that has already been established for us because we're just past 15 minutes into the New York Open. So lots of positive things happening here, guys. There's a lot going for this particular trade, but obviously not having that space. But when you get confident in price action, like this kind of buy signal pullback, and look at that, it's 233 is in there as well. The 13 wide separating. The MACD is still red on here. But it's crossing
Where's
up.
your MACD?
Sorry, can you not see my MACD?
Yeah, I can see your MACD, but your MACD is not aligned with your last candle.
Oh, you're right. It hasn't caught up yet. That's interesting. Very interesting. Okay, let's try that again. See if it comes back on. There we go. Thank you, Mike. There we go. So at the time, right before that signal, early warning signs that something was happening. We had a triangle up on our MACD, and then that's when price broke above the 233. It came up, rejected that zone. And then we've got our buy signal next. You can also see the ×3 little green circle down there. Our ×3 time frame MACD is also just flicked over, same time. That's also a very powerful indication that the MACD is starting to roll over. Look how green things are now. So pretty quickly during that trade, things went very green. So why I'm going this far back because there's another example where we were on the charts and we kind of missed it. We were a little bit late. Well, not late. It's still very early in the New Zealand morning. But you can see here, I'm pretty sure we get another pullback. There we go. And comes all the way back to that zone. And then what happens? Well, again, pullback into the previous resistance, now support, and the ×3 green trend zone. That's a pretty hefty pullback. But when you see these over and over again, it gives you the nerve to either, maybe close half your traded TP2, leave some in, move your stop loss to break even. Would have kept you in for that one. And then that one ran, I believe, pretty well. Let's see what happens here. So price continued. Bang. There's TP3. White candle. Now we're above the 987, which is pink. We're above teal, the 2584. Another buy signal. So this is the one. I'm not going to get too nerdy filling this in, but here's another one. And these are big trend lines and resistance zones up there. But now when this one fired, look at the difference in the trend table now. We're a couple candles ahead of ourselves, but it was pretty green already at that time. So the next one's at 509. So I've got this main backtesting one. I've made myself a copy, which is going to load. And there you can see at 509, New York session, 3-minute signal, US 30. So filling it in. Level rejected, 987, 2584. Trend is now strong at this point. And so you can see we've come above. We've now rejected the ×3 zone and those two trends, two moving averages, the 987, 2584. Man, if I can rattle these numbers off, anyone can. Okay, and then again, we're in a strong trend. I mean, why do I say strong? Well, let's just measure this. So since here, when did price, from the bottom of this move, when price began to move up, I would call that wave 1 of this move. Then it comes down and up and down, and now we're in this next wave. Price at this point, when this signal fired, price had moved 275 pips in just over an hour. So even over here, 260 pips in 42 minutes, and then we had the pullback. So I would class that as pretty strong. There's a lot going on right there. And this is also pre-news event. There was a news event coming up 3 hours after this. So you can see there, guys, then what you could do, because you're going to lose where TP3 or TP2 is once the next signal prints. So one thing you could do is get a long position tool, smack that at the top of that buy signal, get that stop loss level with the SL level right there, and then you can see 59, or call that 60 pips. Drag that up to TP2 or TP3, whatever, and then see how it plays out. So this being a 2-to-1, risking 60 to make 120. What happened on that one? Let's let it play out, push play. MACDs are still looking good for us. Trend zone table still pretty green. What happened? Do we get a pullback? I have no idea what's honestly going to happen next year. I know we did run eventually. So what's happening? Are we going to get a deeper pullback? Maybe. Still holding above our entry. If you entered on that buy signal, this is when you'd be sweating. You're now at break even. You maybe even be in drawdown. Let's draw this out a little further. What's going on? Coming back for another buy signal. Okay, so now at this point, that one didn't finish. It pulled back enough to give us another crossover. So it doesn't mean you close this buy necessarily. You haven't actually been stopped out. But I just want to reiterate that there's a new buy signal. And so you can keep these levels. This might still be your target from your first one, but you did get another one. So that's just for right now. Keep that there, because that one got hit almost instantly. But, pulled back after that. But we're still, this original buy signal, we're still in a good zone. But what happens? Does it get stopped out? Pulls back to 987 ×8 trend zone. Bang! What happened there? Okay, well, that just smashed. So you can see there, now we've got another buy signal, and that TP is way up there. So anyway, I just wanted to show you how you can come through and start to document these things. So what happened at that moment? Man, 8 a.m., that was the news event. There we go. So we were already could have potentially been in a position already, and I think we were on our live analysis in this zone right here, and we talked about what to wait for and having a nice big juicy pullback like that. And man, going into that news event, there were pips. Anyway, so I wanted to show you how I would go through, and then you could screenshot these. Every PC and Mac has a different way to screenshot, but the things you want to at least have on your screenshot so you can identify what's what might be just highlighting the box So you can remember how many pips are in there, like the risk to reward, 44 to 133. And when you click on it, it's also going to highlight the date and time at the bottom and also price scale on the right. And then just screenshot that puppy. So you can either, I go Command Shift 4 allows me to draw my screenshot manually. So I can then go like this and go across like that and click. Now that screenshot's on my desktop. I can put that in a folder and call that number 1. And then I can start to build up a bank of what those all can look like. And guys, you can play with this. You can treat it, like I said, treat it like a journal. You can treat it like I'm going to go and log every single signal that fires inside of the windows that I want to play with. Let me unshare my screen while I wrap this up and I can actually see the chat again. There we go. And yeah, treat it however you want to treat it. We're going to be able to edit this over the next, month or two, etc. Once we get the feedback. We put a lot of fields into that thing, like a lot of columns so that we can get a lot of info. And then at the same time, it just means you can be that much more aware of what's going on in that trade when you're breaking it down. So few things written there, typically dirty 30. Yeah, Mark, that's for sure. Okay, it's got to go to work. That's fine. Okay, so let me see. No more other questions after that. Hopefully that's resonating, guys. The idea was, one of my original ideas was to get you to actually go back and just basically screenshot like maybe a dozen buy signals, a dozen sell signals that were all specifically golden setups, meaning all the trend zones on the top, which you'll only get a buy signal, for instance, if they're all going up. And then if the MACDs were also in the same. So the times 8's looking up, the times 3's looking up. And then what we also realized in the last little while, and Dad can comment on this as well, is that sometimes golden setups are not very golden when they're 7 waves into a move. When they're early on in the move, that is when they carry the most power. But sometimes a non-bright signal will actually perform better. It depends on how deep into the trending move we are. So you'll see even as that trade, as the Dow plays out there, what happens. So I might actually screen share one more time, and then I'm going to hand it over to Dad. Let me just pick up on Zoom here and share, and I'll just share TradingView for this sake right now so we can just see that a bit cleaner. And then I'll bring Dad on in a minute. And let's just play this out a bit further and see what happened. So we had the news event. That's going to play out. I want to just hide these drawings so we can just see this a little bit cleaner. And maybe this thing can speed up. Yeah, there we go. Now we're going to start to run, I'm pretty sure, from memory. Let's speed this thing up. Times 5. There we go. So there we go. That is a massive trade right there. That one, that fired. That stop loss, I can't quite tell if it would have gotten hit or not. Oh gosh, now all the drawings are coming back. It looks like it may have just been safe. And that TP3 was 332 pips. So you would have had 108 pip stop loss on that candle. It was a news event, but even given that it was an interest rate news event, that still performed wonderfully. So let's just turn that off and let this thing play out. I'm going to hide these drawings. Hiding, no, wrong thing. There we go. There we go. And then price pulling back. And then, obviously there's different signals. There's a counter trend signal, which looks like it played out nicely. I missed looking at it there in more detail. Table is looking green again, getting back on trend, huge pullback. And I want to pause for a second right here because let's turn off the indicator. What did we talk about last week, guys? We talked about fibs. So from the origin point of this move, this is where we were when we talked about that first trade signal. Now all the drawings are going to come back. But if you fibbed from that low to that high, oh goodness me. Price pulled back to where? Pretty much almost on 50%. And then what happens? Like you just keep going with this. So from the low, just drag that up higher. Where did price pull back to on here? Well, it looks like 382 because I'm just trying to get this thing to kind of line up to where I want it to be. Then once we're at this top section here, I'm going to drag this right across because now we have an ultimate high from the origin of this big trending move. Look at where price pulled back to. Can anybody see this? 50% level right there. 50% level, 50% level, dunk, 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 and then back on trend. Guys, you have to draw your fibs because once price broke down from here, once it broke under that 12.4, especially down to this 236, and you can see the pause around there. Then once we broke that 236, the next level you can expect in a strong trend would be 382. Slice through that next level, 50%. Sure enough, a whole lot of consolidation. Let's just turn off the drawings and turn on the sessions because where are we? This is probably Asia now. On Thursday, yeah, this is 6. Yeah, price started to consolidate. There we go. So Sydney and Tokyo actually brought that drop off. sideways action, London brings back the trend, and then price just keeps going. So anyway, that is more than enough of that, but just want to give you that idea, like be aware of where you are when you're watching price like this, the sessions indicator, whatever does it for you. But I would, if I'm only testing New York or London, maybe just go and draw a box around it before you turn on the replay mode tool so you can see at least where you are. But how is that for price action, guys? And then we're back to New York and woof, there we go. That was Friday morning and ripping. And I mean, we just keep going, right? So again, something else I talked about on our live morning analysis the other day was start looking at how London is often the high or low of the day. And you'll see what right here, you can see already, there's London, the high of the day. It started here, but then it put in the high of the day. And then New York, once it broke lower than that, you'll almost never see an engulfing session. What I mean by engulfing, you'll almost never see New York being wider on the bottom and the top. Very, very rare. And so here you can see London was the low of the day, and then New York went higher. Once it broke above, it came back forward in a retest and gone. What happened here? London, low of the day. So you just start to see these patterns of the New York session constantly being like either trending in that direction or trending in the other direction, but just something that you'll only start to see if you spend time doing this kind of backtesting. So gonna leave it there for that for now and let Dad jump on and give us some source as well. So hopefully you guys are getting something from this. Let me just see, Johan, can you show your measure? Oh, yes. Thank you. Thank you for reminding that. I will quickly do that. How to measure those pips. So let me get back into trading view and then we'll get Dad on. Thank you for that question. Sorry, I missed it. Let's just go back to the trade that we were talking about because I had the drawing tool on there and I might just make this a little bit easier to show. And let's just get rid of that fib and turn off the sessions indicator quick. There we go. So when measuring, we'll turn on TrendForce because we need to see where those levels were.
Oh, we can't see your screen. You've got your sound mixer on the screen.
Oh, sorry, guys. Shared the wrong box. There's too many boxes here. It is Trading View. Wonder why I did that. Sorry, guys. There we go. Can you see that? There we go. Thanks, Dad.
That's good.
Okay, so here, back in Trading View, to see those particular TP levels, we've got to take the replay bar back to there. So let's just do this for now. We'll click it on. It's going to play just a couple bars so that we can see what's what. And then just taking you to this real example, man, 3, back-to-back bangers right there from last week, Thursday. Let's push play, and this thing's going to go a bit faster on ×5, but there we go. So we want to do, that'll do right there. So measuring tool over here, measuring stick. You want to go to the close of the candle. So the buy signal's there. The close of the candle on a bullish candle is the top of the body. And then you want to measure down first. So there's the stop loss level is in here, which you can't see, but I'm just moving this over. So you can see that my level right now is in line with the stop loss level there, 44, 45 odd pips. So now I know, okay, that's where the stop loss is. And if I want to measure up to TP1, there's TP1. Now I'm keeping it on that same point, still magnetized to my entry. TP1 is there. That's 1.5 times our risk. So that's it's by minimum. TP2 is a 1 to 2. So there's 88 pips. So that's double that risk. And then TP3 was up there at 134-ish. So the easy way to hack that, you can see when you draw the long position tool on the right spot and you drag the stop loss level, when you drag that to that, I always draw these guys. I know Dad doesn't like to, but I do. So do what you like. But that then tells me 45 pips. TP level, there we go, 90 pips basically. So you can use the tool to tell you how many pips it is right there and the risk to reward. That was basically a 3 to 1. So hopefully that answers that. Let me unshare and go back. There's one more question. Wendy, with fibs, you draw it to the first high, but it looks like you keep lifting your fib up as each level keeps getting higher. Yeah. So especially on a higher time frame, that low point is still essentially our low point for that, or the origin of that move. And then as we're getting new highs and pullbacks, so price ran and pulled back, and if it pulls back more than that 236 level, then that fib becomes active and you can hang out and wait for that 50%, 61.8 level potentially as a healthy pullback. Then if price continues to ramp up, and this is where Dad's fibs come in with the way that he has all of those extensions in play. He'll draw one fib and he'll pretty much get all of those levels going up. It's a bit much for me. So you can use his and it'll work perfectly for this because it'll give you all those extensions. Mine is way more designed around predicting the retracements than the extensions. His is way more geared towards those extensions. So all just depends. With the retracements, you want to connect the lowest low to the highest high in that zone that you're looking at. And then there you're going to see, okay, here's where the 50 to 61.8 retracement level is. And sure enough, with that Dow move that we looked at, price did pull back to that level. So that's how I draw them. Dad would draw it from the low to the first high of right before that pullback. And then all those levels would stack up for those particular extensions. I guarantee got hit in that trade. So hope that answers that one. Dad, I think it's your turn. Let's find you, get you on here and talk a little bit more about some backtesting.
Cool. Here I am. Maybe I can jump in straight away and share my screen.
Definitely. Let me unmute myself.
Have I got power to share?
I'll give it to you for good behavior. There we go. You should have the rights right now. Let's go.
There we go. Cool. There we go. Let me just move some beautiful faces onto my monitor up here. And this is blocking. Cool. Well, that was so good, Ty. Wow. Very, very good. Thanks. A lot of wisdom there, guys. Hope you were making notes and learning. So this is all about backtesting. So I'm not going to go into the replay button. So firstly with backtesting, in order to save time, backtest the time you normally trade in, and obviously your chosen instrument. If obviously I mainly do the Dow and also the NASDAQ, but don't waste your time unless you've got a lot of spare time on your hands. If you want to change instruments, backtest first, see what good times there are to trade, and then backtest around the window where you trade. And that's the easiest way to see if it's actually worth trading at that time, what the signals are like. So I'm normally a morning person, so I like to trade sort of, around 5 o'clock, sometimes earlier, but around about 5 onwards. And so I look at the signals, see what's happening around about those time zones. And so especially, obviously, if you just look at the NAS and the Dow, I love how they behave. Well, there's some things are predictable. For example, there's always a move around the open at 3:30. I traded that a little while back, and we'll trade that a lot more going into next year. So there's always a move at 3:30. You obviously got to have a bit of skill up there to trade it, because it can be big candles. Then there's often a move around 5. Just before and just after 5, there's often a move. And the reason is because the London closes right now, London market closes at 6. So in that last hour, lead to the last hour and a half to hour before the London close, there's often a move. So I make sure I'm ready around 5 o'clock, to press the button and to see if there's going to be a good trade. Then often there's a trade. Often the market goes quiet between 6 and 7. That's like, the traditional lunch hour, the New York Stock Exchange. So there's not often a lot of trades between 6 and 7, but never say never. Sometimes the Dow and the NASDAQ just fly all through those times. And then often at 7 o'clock, there's a move. Just after lunch, there's often a spike and a move. And then then around about at the moment 9:30. We used to call it the 7:30 Express, but sometimes, in the last hour and a half, 9:30, there can be a good move too in that last, either, half an hour each way, but sometimes on 9:30. So the idea is, backtest the times you trade in. What is your preferred window? And to make sure that's worth it for you. So I just had a look, around 5 onwards. I just quickly this afternoon, I just took the Dow and I looked at signals in those times. And what is interesting, and I just looked at 8 signals that hit TP2, or most hit TP3, but 5 of them were all close to 5 o'clock. There was 5:34, 4:53, 4:47, 5:10, 4:44. So it's amazing. Now, I only looked at buy and sell signals. So we are going to do a session early next year on all the signals that you can enter trades in. So, there's, Tom mentioned buy and seller momentum. There's our triangle up and down, histogram changing color, even the EMA 13 going bright. We've got breaking support and resistance zones, breaking the opening 15-minute range. There are multiple signals. So I just looked at sell signals. So there was already almost every day around 5 o'clock, there was a signal. So that's why I think it's good value for me. If I get up, before 5, ready to trade, then I'm highly likely to get a signal around that time. And so I just wanted to look, and I'm going to mention some of the columns. Ty's already covered that very well. So I thought I'd just look at a few signals. We've got about 20 minutes left just to look at what made them good signals, despite, there may be some things that could have worried you. So for example, look at the sell signal this morning was at 5:34. And so if we looked at the rules, there are 2 things obviously were not good. So we looked at our rules TAS, for our trend zones, angle, and was there space. So the trend zone, obviously, you won't get a signal plot unless the time frame you're on. I'm just looking at the 1 minute on the Dow. So we can see here on the 3 minute hadn't crossed over yet, and neither in the MACD had they crossed over yet. So that could have made you a bit nervous about taking the trade. But yet, I mean, although there was a pullback, I mean, this thing went all the way down to 100 pips. I didn't quite get TP3 was just over there, but TP2 was nicely situated. I've got a fib here, a 4-hour fib level at 384 there, 382. But what made this, one thing we also want to emphasize at the signals, but more and more, as I was saying to Ty this week, we need to emphasize more and more, has price rejected a level? Whenever price rejects a level, there's a strong indication that price is going to move the other way. So we can see a number of things. So despite the fact that we didn't get trend zone alignment 3 times higher, I mean, 8, look at this beautiful, I would call this a cloud of liquidity. When price pulls back into the 8s, that's going to get a lot of liquidity. So that made it good. You know, previous pullbacks only went to 3, that went into fresh air. This one pulled back into the 8. But you can see the 8 was trending nicely. And also, although things were thinning out a bit, we were still bullish on our 8 there. And I think Tom mentioned very often you see the 3 minute pulls back. So don't always stay out of a trade if the 3 minute MACD is pulling back. Because if the 8 is still bullish, that can essentially, we like to say, you know, higher time frames bully lower time frames. So there were some keys. I'll look at a few keys in terms of what made the signal good. So you would have here, if we looked at you would have needed a 50 pip stop loss, 48. No, sorry, not that much. So from the close of that candle to your stop loss would have been there was 36 pips. So the easy hits, you know, it would have been TP2 was at that level. It wouldn't have quite got a TP3, just fell short. So a good 2 to 1. But what I want to emphasize here, despite the fact it pulled into the 8 zone, can you see these 2 lines here? We got basically a daily pivot, and also we got a weekly pivot. And you can see, we call this a cluster. Look at this price action here. We can see this wick, let me just make this really big. We can see the first wick to the millimeter tipped the weekly pivot. The next candle broke that and shot up to a daily pivot. And then again, it broke through and retested to the millimeter. That's a classic sign that price has rejected a level. Now, we'll give a lesson on when you can enter a trade early, but when you see that pattern, plus what you can see here is the classic, we love the Heikin-Ashi reversal pattern. You've got a bullish candle, then a nice doji, then a bearish. When you see that pattern pulling into liquidity, the reversal pattern rejecting 2 moving averages, and then look at that. If you took that candle and you took that all the way down, I mean, that thing went down 135 pips. And also, just the way I draw my fibs, there was another level there too. If we just fib the low to the high, so if we went, and so I said we do our fib slightly different. We took the high was over there, and we took a fib down to that low, and we look at the pullback. Look at this, look here, we can see, look at the 382. It pulled back perfectly to the, sorry, here we're looking at this trade over here. Look, we can see the rejection of the 382. So this is a great cluster over here. You've got 3 levels that price is rejecting. So when I take a trade, I'm always looking for, has price rejected a key level? So in terms of, if we filled out, you know, the spreadsheet that Ty's prepared, you would know obviously what we're trading, the time, the day, etc. It's a sell signal. I'm just looking at signals and just doing some analysis. So let's go through the columns. The signal type, well, it was a sell signal. The rules, well, the trend zone wasn't fully fulfilled, but our angle wouldn't have been strong, but it would have just turned around on the signal, and there definitely was clear space. The next bit in line was a monthly pivot way down here. You would have easily got to TP1, but it smashed through hit TP2. So the stop loss, I think already I said the stop loss was, you need a stop loss of 36. And the pips was, you know, the TP2 would have been over there. You would have got a nice 2 to 1. You could have filled that out. So they're not, you know, what is that? 75 odd 6 pips. Now the wave number, we can see there were quite a lot of waves here. So I'm just really drawing out the signal here. So we can see from the top, let's call that there's wave 1, there's wave 2, there's wave 3, there's wave 4. There were 5 waves in this move down. But the key thing to look for is with every wave, obviously what makes a wave is a pullback. This was the only wave that pulled back into the 8 times higher. So again, don't get put off. Sometimes, occasionally, the zones may not be perfect 3 times out, but the other reasons we can look at. Rejected a line and we pulled right back into the 8, and that would have made that trade accelerate down. So the wave number, what did I count there? It was about 8. What is it? How many waves? I forgot. There was 1, 2, 3, 4, 5. There were 6 waves in that move. So there was quite down. So you would have put 6 waves there. Level rejected, you could have put 3 things. You could have put daily fib, weekly fib, daily pivot, weekly pivot, plus a fib retracement, the 382. So it rejected 3 levels. That made that a strong trade. Now, in terms of pattern, there's not really a clear pattern here. I mean, you could have drawn a trend line, from that low. I would have keep, adjusting my trend lines. That would have made it too low to justify breaking a trend line. That, if I'm honest, I wouldn't have drawn that because it made a lower low. So the only thing there would have been in terms of pattern, there would have been some divergence. We don't emphasize divergence a lot with our strategy. It's not very clear, but we can see if we can see here there was, there was a higher high and that move up. And if we look down on our histogram, there was a lower low. So it wasn't huge divergence, only histogram divergence, very slight. But if you were sharp and eagle eye, you would have seen a pattern. And where there's divergence, it always makes for a safer entry too. So that is one of the signals I wanted to look at and analyze. So the trend at this stage, I would say range. Although we are on a downtrend, the table was mixed. I did look back. So the table was a little bit like a Christmas tree. We were ranging, but again, reasons to take the trade were because of this 3 levels we rejected, plus pulling back into the 8. So that's how you would have filled out the table. Would have put range or week at that stage. It was a week, although in a strong downtrend in the 8, on the 1 minute, pretty weak. Let's have a look. Let me just delete this fib quickly. And let's just look at Tuesday. Oh, there was a buy here. While we're here, there was a buy. If you really waited, now obviously I've got my screen crunched up. So let's have a look at the signal over here. So if you're right in this signal, obviously the parts that easy to fill out, we know the time, the day. We've taken a buy signal, and that's a strong signal. Remember, Bright Tide said very well, not every bright signal is going to race, into oblivion, but it was bright because all 3 zones were bullish. It was buy signal in the main indicator, and also on the MACD, we can see that everything was also bullish. So that gave us the bright signal. So again, we want to look at what made this a strong signal too. So you would have filled out that. Your stop loss would have wasn't a huge stop loss. The stop loss was 17, and that hit all the way up to, it just hit TP3. That would have been TP3, just the wick would have just hit it. So that would have been a nice TP3 signal. So there would have been a 3-to-1. So stop loss 17, pips were about 51 if you took it to TP3. The risk reward was a good 3-to-1. Then the wave number. So we have to the waves here. We're going to look at the lows. So that we could probably count from there, although which was lower. That was an equal double bottom there. You can see wonderful pattern. You make a big W, and after that we saw price moving up. So look, that could have been wave 1, wave 2, wave 3. That would have been wave 4. So quite well established. But again, if we're looking at price, this is a nice pullback. Price rejected the 233, pull back right into the 8. We love it when it pulls back into the 8. And by the time the signal came, we were above the 233. So that's very safe. When you've closed already above, so we can see we had 3 tests here. Price couldn't close above the 233. This one, price closed above with a buy momentum signal, indicating buyers were now back in control. And of course, a bright buy signal pulling back into the 8 times higher. That would have been a great trade. So there was a TP3 there. So let's see what a level rejected. Now in this case, there wasn't where's our big round number? It was way down there. There wasn't a level rejected here, except we could say we did reject in a sense 8 times higher. This was a little bit far back. I wouldn't count that as a level rejected. That's a monthly pivot over there. So interesting, there wasn't a clear level rejected, but we can see the power when price pulls back into our 8 times higher, always a move up. So we still got time. Let's look at another one. Let's go back to Saturday. So let's pop on the calendar and let's go back to Saturday, and I've set it on 5. Hold it a sec. Wait. Yep, no, we're all good here. So let's just go to, let's have a look at this signal over here. So this was Saturday morning. Now here's a great signal. So let's have a look here. So obviously filling out your wonderful table for backtesting. We'll know the time, date, etc. Session. We're in New York. We're on the 1 minute. We trade in the Dow. It's a sell signal, and we're just looking at sell signals tonight. Let's look at the rules. Now this we were 1 candle away from a golden setup. You can see here if this crossover was literally 1 candle earlier, it would have been a beautiful golden setup. But what made this signal very strong? I mean, how far did it run down from that sell? That went down in total 350 pips. But this is always something to watch. I mean, I love it. Whenever you see, remember this, whenever you see the 233 close to a signal, but also sitting inside the 8 minute, there's always secret sauce. So here we got the 233 already red because it's bearish, and it's actually sitting inside the 8 time frames high. That always generates a move. So that's almost in a sense a super signal. But look what is happening here. So in terms of, I mean, you can see that you wouldn't have needed a big stop loss. Yeah, you only needed, okay, that was 54. I mean, that's fair size, but of course that went way past. I mean, TP3 would have been even above the 2584. But so if we look at, so that would have been a TP3. How many pips? So I forgot to say the pips were around, 150 pips. So a good trade. And looking across the form, we've got the stop loss, the pips, the risk reward. There was a nice 3-to-1. Then also, this is early in the wave. This was the high. So that was there was 1 wave, 2 waves. So this was basically the start of the 3rd wave. So we're catching it very early in the move, which is very good. So then looking across at our form, the level rejected. Now this is great here. Look here, we got a few levels that have been rejected here. So what we've got is having the big run numbers are a little bit lower. Yep, we closed below. There's a big run number over here. So price closed below. So in a sense, we did reject. It was after the signal, but not a bounce off. But we closed below a big round number. But this is the key here. When you see, look at this, we can see 3 times price rejected the 233. So that counts as rejection of a level. This level line here, we close below. That's a daily trend line, which is massive. Remember, always look left. Is this a valid trend line for price action? Look here, look at these candles, all almost kissing, almost all touching or kissing this daily trend line. And again, look at the price action. There were other factors here too, because we got the 987. So that was massive. So we rejected there. We closed below trend line. Of course, the 987 also massive. And we call this compression whenever we see these higher time frame moving averages, the 987, 233, compressing together. That's going to always lead to a big move. So I love it when I see the 233, the 987, even the 2584, but also seeing all our trend zones compacted in a narrow range, the price always explodes. So rejected levels, was there any pattern? Well, we could have drawn a trend line here. So from this low, there was a trend line over there, and we would have moved it. And so if we had it there before that candle, yep, it kind of did reject a trend line. Let's look, was there any divergence? If we're looking, well, there was this very, very small divergence only in the histogram, just like the previous trade. We can see we got a high there and a lower high, and here we got a lower high and a higher high. So there was a bit of divergence with our histogram. So again, there was a histogram, potentially break of a trend line. The trend, I would say, I would call this now a strong trend. When you see this happening, red, we're definitely in a strong down. It's at the beginning, but I would definitely say that's not rangy. That looks like it's heading for a strong trend. And the table, I mean, I haven't got it up here, but it would have been more red than green. So have you got time for one more? Let's look at one more signal.
Right before you leave that spot, like I remember you saying it's not a golden setup, but it's also something we've seen a lot lately where, the times 8 is already on the MACD is well and truly pointing down.
Ah, that's
I mean, you
beautiful.
can see when the times 8, look at where the times 8 crossed over.
Yeah,
So way back, that red, further left, further there,
there.
little more, is that circle?
That is the
One of those. Yeah, one of those two. So then essentially that's what we have is, so the times 8 is showing us like 8 times higher, this trend is down. And then you can see the 1 minute has pulled back and we get that little blue trend zone in the MACD and obviously in price. And the 3 minute MACD is only a little green because it's basically lagging a little bit to that 1 minute. It just hasn't had a chance yet to cross back down. So you'll very often see that. You will see the times 8, the bigger trend 8 times higher is down. The 1 minute has pulled back a little bit, giving us a rejection and a dip into liquidity or into the clouds. And the times 3 might just be a little bit green in this context, but it's now about to roll back over. And the 1 minute rolls over first, and then sure enough, then comes the 3. So that's a beautiful example. It's not golden because the times 3 is green,
candle.
but
you missed it by candle.
By one candle. But those you'll find sometimes are almost more reliable than some golden setups if you take the waves into the consideration. So love it. Really, really good one. Yep.
Well, maybe Ty, we're probably out of time. I don't know if we should do one more. I think we've covered.
Oh, I suppose that's more than enough to get everyone going. I've got to figure out some instructions for giving this to everyone. So yeah, any more final closing thoughts?
Yep, not at all. So Ty and I were talking, whenever you see us not posting a lot of wins,
maybe unshare your screen and then we'll get our faces on you.
Hard at work. So we're looking forward to some exciting things for next year that are looking very, very good in terms of developing TrendForce. So exciting things for next year.
Definitely. Can you please unshare your screen?
Unshare, yep. And I'll hand back to you. Let me find where the unshare, stop share. There we go.
There we go. And then we can both be on it. Yeah. So just to reiterate what Dad just said, yeah, if we're ever both a little quiet in the chat and not posting any trades, we are working like crazy. Like, it just means that we're deep in research. So we're both in 2 different lanes. Dad is going insanely deep on some things right now, because you can imagine until something is perfect, the OCD or the CDO is going to keep Dad digging and digging. And the maths will drive him all the way to finding things. And there are some things. We've alluded to something in our morning sessions of one thing, and there is another. And these things are in full-blown development at the moment and figuring out, like, we're never going to give anything until we know that it is tested and refined and it's adding. And by adding also means we're looking to add things that can help us subtract more things, if that makes sense. We want to try and make it, again, the goal is to make it as clean as possible, as less cluttered as possible, but have the right information. So that is definitely the goal. I'm not even going to say version 5 at this point. It's just we're working on some serious things. So Dad's deep in that. I'm deep like crazy. I have found the limits of what I can do with ChatGPT at the moment. So I'm busy working on some major website refinement. And we're heading into the Christmas break. So guys, the idea of tonight was to give you guys a framework so that over the next couple of weeks, there's still loads of trading opportunities. Like, I lived in America for 3 years. It's not summer break for us here in New Zealand is not summer break over there. Between Christmas and New Year, it's like there's a week off, so to speak, maybe a few more days on either end. But for the most part, trading is going to still continue. New Zealand's not moving the charts in any humongous way. It's London and New York and whatnot. So be well aware you are more than capable of still maintaining whatever sleep you want to have. By all means, get some healthy rest. But if you've got less on with work or whatever your day thing is, then you obviously have got a greater opportunity to be focusing on this. So backtesting like this is a great opportunity. Go back, spend the time, brainwash yourself with what those great setups look like. Take those screenshots. I'm going to share a link to that backtesting sheet that I've created. It's going to be called Backtesting Sheet. Here's the number one instruction. We can't all have everybody editing that one sheet. You've got to basically take the link, and then click file, and then click make a copy, and save your own copy of that document so that you can then edit your own one, and we don't have 100 people all editing the same one. You can imagine how frustrating that would be. So we might have a bit of a backwards and forwards of figuring out getting that right, but I'm sure by the end of it, everyone will have it. And it made it in Google Sheets, so it's accessible in case some people don't have Excel, something like that. So otherwise, guys, we'll wrap it up there for tonight. That should be more than enough. But otherwise, trade safe. We'll see you still Thursday morning for our last live analysis session of the year. At this stage, looking at taking, I think, a 3-week break. I think we've always said that, we run within the school terms. There's a much bigger school term break at the moment, but we should be back mid-Jan, probably somewhere around I want to say the 12th-ish, I think, or the 13th is a Tuesday. So who knows? I might even have a little inspiration and pop-up session in between now and then, because I have got some things in my mind as well around some mindset, and including the top 10 commandments of trading. I've also got a few things in the back, which I might just randomly pull out, but we'll see. But for now, definitely needing a little bit of a break on this end for how hard we've been running this year. Once again, love and appreciate all of you so much. And we will be kicking off the new year with an event as well very early on, so we can get face-to-face again. But all those details will come in on the other side of it. So in the meantime, we'll see you all on Thursday. We'll see you in the chat. Have an amazing rest of your week. Trade safe. And we'll see you soon.